Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start with, the Australian dollar staged yet another brave attempt towards the 77 handle on Friday, however, sharply reversed after the release of the non-farm payrolls number. With the US dollar capturing its momentum, the price action tumbled heavily, with the objective for last week at 76.40 reached after printing a low of 38. Overall, from the technical implications, I do expect to see further weakness for the Australian dollar and look towards 76.40 and lower to 75.80 and reassess from there. This Tuesday, we do have the announcement of the RBA monetary policy meeting and also the RBA rate statement, which the market will be looking very closely to. And also this week, we have China to release its trade and inflation numbers for this week. Looking at the euro, it was a little bit mixed to the start of the European session. However, the initial US dollar briefly did turn away from the top side and slowly declined, which gave enough momentum for the euro to rally to challenge that top side level near the 117.0515, which was rejected. The release of the non-farm payrolls on Friday number was at 261,000k in October, below expectations of 312k, but the prior figures revised from negative 33k contraction to 18,000k rise. The most prominent setback was the release of the average hourly earnings, which appeared to have stalled at 0.0%, below the expectations of 0.2%. Any disappointment was lightened by the unemployment rate, which fell to a 17-year low of 4.1%. For this week, I'm looking for further weakness with the dollar increasing to the bullish case. Therefore, we could see the move towards 115.95 today, and then I expect to see a further challenge towards 115.5, with expectations of seeing a move to 114.70-75 and reassess from there. It is interesting that the dollar yen price action put in another brave attempt towards that 114.55 crucial level, but failed. For the outlook of this week, if the US dollar does contain its bullish traction, then we should see one more attempt towards the upside. But we've got dojis, we've got hesitation, and it is a crucial level. But we should still keep an eye on this level, because if we look on the broader picture, I would believe the market is built above here of a lot of stop losses. If we do see a break to those stop losses, then this would fuel the rally up towards 116 as an objective. However, with the failed attempts that we keep witnessing, my strategy is still to buy on dips. Not at 113.5 though, more towards 112.80. But do keep an eye on this pattern. The stochastic is a little bit biased to the upside along with the RSI, but the MACD is lacking momentum. My view on the pound is still neutral. And the reason behind that is that prices plummeted last week from 133 and took out the support of 130.60, which has left me neutral in the short term. I'm looking for better opportunities. The indicators are a little bit mixed and still a lot of noise likely to be played out for this week. Last week, the Bank of England, as expected, did raise interest rates by 25 basis points to 0.50. Although the market is actually looking at this rate hike since 2007 as more of a dovish rate hike. The Bank of England indicated that any additional rate rise would be gradual and dependent on the Brexit. The gold outlook is still bullish, even though it did fall $10 from the high of 1,280 on Friday to where we're trading now at 1,269. My strategy is still to buy dips. And while we still maintain above this trend and also above the key line at 58.60, then I'm still looking for a move up towards 76 to 81 to 83, which could extend towards 90. So as I mentioned, the strategy is to buy on dips either towards 65 or from that 58.60 level. On Friday, the oil price action continues its rally, reaching its highest level in more than 2.5 years. The outlook is still overbought, and I still am a little bit concerned, even though we have broken above 55.60, that we can see a rally on towards 58 to 62. But as I mentioned, we are overbought, and I still would like to see this market retreat or consolidate before getting the next move to the upside. Otherwise, it will fail to sustain. If we do get this consolidation or pull back towards 54.75.85, with the uptrend seen way beneath at 51.05.25, then we could see this upside target reached. The trend on both daily and weekly is quite bullish. So I do look for any kind of pullback or any type of consolidation before the move. So that wraps up my daily video. Thank you very much for joining me today, and I hope you have a wonderful day to the new week.